All right, hola guys, ¿qué pasó? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's get right into it. Let's look at Bitcoin. Let's continue on with what we've been doing. These two charts from 2021 and 2025, you can see they're almost duplicates. So far, we've been almost in lockstep with 2021 with the subcycle B. Now, this is subcycle B from 2021. This isn't the first bull cycle. This was the second one. Remember, we had this accumulation with this deep spring that occurred after we made an all-time high here. See at this UTAD, we had the preliminary supply, buying climax, upthrust after distribution, and then the LPS. It had one LPSY, which is a redistribution. It retraced about 50%. We've already done the Fibonacci's and all that on other videos. You can go back and look. But this, the equivalent of this area here, this well, this isn't redistribution. This is accumulation. This accumulation range here, this bottom with the deep spring that precipitated the next leg up, was the equivalent for us would be about 80,000 in here. And indeed, if you do the Fibonacci retracements off our current this cup where we're in right now, it brings the 618 Fibonacci retracement down to about 80 grand. So if we do retrace from here, which seems like so far we've been in lockstep almost with everything occurring, working up like with this 3 drive with the we'll say the 1 is a preliminary supply, and then the 1, 2, 3 with the 4 being the UTAD. Same thing, remember subcycle B, but this is A. This is the first bull cycle that we've had of this year. So in this would be preliminary supply, buying climax is number 2, upthrust is 3, and then the upthrust after distribution as 4. So we did have a little bit of a retracement here. Same where we broke this macro trend support line, came down and formed a lateral trading range. Roughly the same points, like the AR, like the automatic rally would be here. If you would count 4 as the buying climax, automatic rally, secondary test would be A, and then sign of weakness in B would be this spring area here, where the deepest part of this range was, this accumulation. We could kind of say it was an accumulation, really, I guess, because we did accumulate and it marked up to the 618, and then from there we had the macro ABC, which came all the way down. There was no more, and this was a proper LPSY, proper LPSYs. LPSYs, of course, mean last point of supply, redistribution ranges. Never again will the price in this cycle system reach this point. And so, all right, so that's talking about 2021. Now here we are in 2025. The waves played out almost to a T. We've had the sell-off from the all-time high of 108 grand back in December. We broke the macro trend support, and then we had this this cup, as it were, this reconsolidation range, and we're trying to determine now. Whereas this marked up to this bull trap in C, and then it sold off on a macro sense. We're kind of wondering what it's going to do this year, and that's what it's all about. And so, so far, yeah. So the price is mitigated. The 4, C has mitigated 4, like we saw in 2021. C has mitigated 4. Immediately, we had the sell-off. We had a sell-off back down to the trading range resistance, which is now support. It's flipped it to support now. Remember, this is, where it started with A after the buying climax, automatic rally, secondary test. So A is a secondary test level. And then the support on these trading ranges, this would be if this is the buying climax, well, then this would be the automatic rally. So between the automatic rally and the secondary test, we've had the consolidations, just like we've had in both. But in this one, the waves are expanding. See, in this one, not so much in 2021, but in 2025, the waves have been expanding. And these expanding waves where the spread is growing, that usually denotes distribution. That's market makers, that's informed interest selling into the pumps and then just to drop the price. And we see supply predominance down in the vertical bar. You see that here. We didn't see that so much in this range, although this proved to be distribution ultimately, right, on the macro sense. This one we're still trying to determine. So far though, like we said, everything has been lockstep. We breached the all-time high here. I think we did that earlier this morning. It's gone up to like 109,000 or whatever it was here, whatever we peaked out, and then we had the sell-off. Here it reached a little bit higher than 67. What was it? 67.1. I think we peaked out, and here at the 618 at 68.9, almost 70,000. So we've already done everything. We've already reached a point where back in 2021, 4 years earlier, we peaked out and dumped from there. Now, the question is, are we going to dump from here or are we going up further? The $1,000,000 question, right? And for this, we need a crystal ball. I'm just going to be totally frank with you. I don't know. I don't know. If I said I would know, if you're listening to any influencer who's talking about they're 100% sure that we're going to go up from here or we're going to dump from here, pump or dump, and they're doing it 100%, then I would just say, these people are immature in their technical analysis skills, and they actually suffer from Dunning-Kruger effect. They think they know more than they do. So, because the truth is, we just don't know, but we can kind of get clued in pretty good if we have skill in at this stage in volume spread analysis. We're seeing a very strong sell-off from here, and we're reapproaching this support line from the A wave. So we can go back. So far, it's obeyed the trajectories pretty faithfully. So let's see what it did in 2021. We had that. So we had the C, the 1, and then the 2, which is kind of like a double top. I call them horns of the devil. We have the buying climax. This is on the micro, the buying climax, and then the upthrust after distribution. Here we kind of had a buying climax here after this 5. This is the one, see this impulse wave, the 1, the 2, the 3, the 4, and the 5. And then this could be kind of like the ABC, A, B, C. If this isn't a truncated 5 wave, then this could be the actual 5. It hasn't really gone up. So if we look at like 1, 2, 3, 4, it can't really work because then 3 would be the shortest wave, and that's a violation of Elliott wave theory. So the 3 cannot be the shortest. It doesn't have to be the longest, but it can't be the shortest. And so I'm more inclined to think of this as the 5 up here at the top, and then the A, B, and then C. And so this would be the top A, or rather this. Let's see. Yeah, we see the 1, 2, 3, 4, 5. This would be coming down. So what we can anticipate now, which is entirely feasible, and that's what I want to talk about, is this redistribution range here. You see how it came back down to support. Here's your second mitigation here. It looks like we're working on that. Here's your first, or rather, here's your first. If we come back down, the second, and then from here we can look to see maybe another local bottom and maybe a B wave. Like this is the B wave. So it'll be A here. B would be the top of this bull trap, and then C back down to the to this area here, the trading range support. So we could see something like that. That's if we're going to continue in our lockstep distribution. Now, if we do distribute from here, I definitely don't think we're going very deep. I think we'll go down maybe to the 618 retracement level. That could put us anywhere between 89,000 and 80,000 somewhere. I actually think we're going back into the 80s at some point. And we're going to reconsolidate there, have an accumulation range bottom out there in preparation, kind of like what we saw here in what we talked about here in preparation for here. So just kind of like these cycles reversed. And so we had the double top come back down. That's if we don't pump any more from here. Right now, it doesn't look like it looks pretty distributional. I'm just going to come out and say it. It looks like we're going to be prepping for a B wave. And then the B wave I don't think it's going to come up as high as as where we peaked out here. But here's the dilemma. We already measured the Fibonacci extensions from this off the swing low here, this spring area in the B wave. Remember, we did this yesterday, and that brought us up to the 618, which is $112,000. And remember, we did that. We did the same thing back in 2021. We did the top of the B and the bottom of the spring, and that brought us up to the 618, which is exactly where we peaked out, which consummated the mitigation here. And so we haven't quite reached the 618. I'm not saying that we have to, but there's still room to grow in this. But I mean, it's going to be kind of it's going to be a task, an arduous task for the bulls to get us up above this liquidity void here to, as it were, penetrate and prevail through it. And if we do that, retest it and gain ground here, support, if we gain support, then we could put up another leg. But that would be entirely breaking with this system that we've followed pretty faithfully so far since this accumulation range down between the two subcycles. So we're just going to have to see what it does. But like I said, we're according to the volume spread analysis right now, we do see predominance of supply as the price action is coming back down to retest this trading range, which once was resistance, but now has been flipped to support. So I'm going to be looking for a B wave to play out. I'm going to be looking as we reach, if this B wave kind of begins to look like it's marking up. Usually the B waves don't go as high as the A, as when the A begins, which is at the end of the 5 wave. So it doesn't usually go past that. So I'm looking around the 1.272. If we mark back up to the 1.272, or even starting at the 1, really, between the 1 and the 1.272, we're going to be looking at the volume spread analysis. And if I begin to see sell pressure emerge as the price action kind of hugs those two Fibonacci ratios, then that's going to be a pretty good giveaway that we could be actually looking at a B wave with a further C, with further downplay afterwards to follow after the bulls are trapped up here, which would make sense again following this Trump inauguration, which is, to me, it's a sell the event. It's a sell the news kind of event, kind of like when Elon Musk was on Saturday Night Live, and it was a sell the event for Dogecoin because we all know Doge crashed after that. And also the Bitcoin spot ETFs of last year, everyone was like, it's going to fly, it's going to moon, it's going to moon. And then what happened? We had a little bit of a micro pump or whatever, and then Bitcoin sold off. I kind of see that in the short to midterm, interim of what we're looking at with the Trump administration, with all the bullish sentiment revolving around there. It's a classic perfect storm to trap longers, Bitcoin top chasers, pump chasers, and that. But like I said, I don't think we're going to come down nearly as deep. Certainly not a macro sell-off. It's just going to be a period of locking in profit for the market makers, a period of reconsolidation. And during that reconsolidation, I can see the resumption of the altcoin season, which is what we saw here between these two subcycles, and then the alts taking off, having their time of glory, and then eventually when Bitcoin has absorbed enough supply and begins to take off again, the alts going back into latency as Bitcoin goes to put up a new all-time high. And then we can see Bitcoin going up to 130, 140, 50, $60,000. And I think all that's going to play out this year. We just need to be patient. So that's what I have right now. Either way, either scenario, we need to be prepared for. Like, subscribe if you get anything out of this technical analysis. Stay safe in the markets. I track Bitcoin. I track Bitcoin diligently, meticulously, assiduously. I do it every day, and I try to update my group, my private Discord group. Check out our private Discord group if you'd like to learn how to trade using price action, volume, like the banks. If you're tired of using all these moving averages to clutter up your charts, nothing wrong with moving averages or MACDs or RSIs or Bollinger Bands or Ichimoku clouds, if that's your thing, whatever trading strategy works for you. But I have tremendous success in just counting the waves and just going off pattern recognition and just the volume metrics and how, and like the synergy between the Fibonacci ratios and the Elliott waves, the volume spread analysis, the Wolf waves, all of that stuff, which is just classical price action. and pattern recognition. So if that's something you're interested in, check out our Discord trading group. I keep it extremely affordable. I think you'll benefit greatly off it if you're serious about crypto and serious about making money and staying safe. Stay safe and prosperous. You can't beat that. So, all right, guys, I'm going to let you go. I'm going to get going. I'll talk to you guys later. Again, thank you for tuning in. Stay safe in the markets. Don't misconstrue anything I say. It's not financial advice, and I do not have a crystal ball. So we'll talk to you guys later. Adios. Be good.